Welcome back to Market on Close. It's time for Options Corner, so we'll bring Kevin Green into the conversation right now, as he's always keeping a close eye on what we need to watch as we head into the close. Kevin, what are you specifically watching right now?
Marley, this is one of the more boring days I've seen in the S&P 500 pretty much all year. Actually, I think this might be the smallest range, or it's got to be in the top 5, smallest range that we've seen from high to low for the S&P 500 all year. So it's been very compressed. If you look at the morning levels that we talked about this morning here, the 6440 level continues to hold as a key area of support. We've hit this level pretty much every single session since about Wednesday of last week, if I'm not mistaken here. So obviously it's been a very critical area. Some buyers have been stepping in, but we have not been able to try to test that upper end of that range, at least for today's session here, while we have lackluster volume as once again, just very compressed action. So kind of going into the close, if we look at the next chart, what are we looking at? We're looking at a 10-point move to the upside or downside here. That's the range that we have for these levels. 6440 to the downside, you want to hold into the close. To the upside, 6450, where we do have over 110,000 contracts traded at that strike at this point in time here. So technically, we are still kind of in this somewhat of a downtrend if you're looking at the intraday chart. And if we are going to continue that downtrend here, let's see if some buyers actually do step in at 6440. But once again, very compressed day. This is a premium seller's dream right now. If you're buying premium on the call side or even on the put side, a lot of theta is burning on an intraday basis, and it does make it hard for some swing traders that are out there or some day traders in order to try to scalp premium or scalp profits in this type of market here. So that's what we're kind of looking like going into the close.
And with these sort of, very narrow range that we've traded in today, are we also seeing decreased volume as well? Is it a quiet trading day too?
When you're looking at the overall volume for today, the S&P 500 total composite volume, yes, it's coming in a little bit light to start off this week, but you do expect that to kind of ramp up as we get closer and closer to Jackson Hole, and as we get closer and closer to September, which is usually a little bit higher volatility when you're kind of looking at it. So right now it does look a little bit light. That kind of complements the lack of price action for the market as a whole, but you're not seeing a complete breakdown. In fact, I would say the information technology sector has been, let's say, a little bit weak today, at least when you're looking at the semiconductor names like NVIDIA for that matter here. But overall, once again, we're trying to hold up as much as we possibly can. It just seems like we are in a consolidation pattern, and we are once again not really trying to find any or not seeing any buyers kind of stepping in. And my apologies, not NVIDIA, but you're looking at some of the other Mag 7 stocks that have been a little bit lackluster outside of NVIDIA moving up today.
And in terms of, you just mentioned, we'll see volatility tick up likely as we get closer to any of the Jackson Hole speeches and any commentary from Jerome Powell. How is the VIX looking? What's volatility like?
Yeah, volatility is still relatively low. This is kind of the problem that you have with low vol, or if you have a VIX that's sitting at a 15 or even a 14.5 level. These are the type of days that coincide with that. So generally, typically this week is where we do see volatility kind of inch up here. We're still holding around that 14.5, that 15 level. But if you're a trader and you like to see really strong trends either to the upside or downside on an intraday basis, you want to see volatility actually creeping up. You don't want to see it really break down from here, because we'll continue to have days like we will have today. And once again, it's easier for us to kind of re-rate volatility higher than it is for volatility to come in lower. Now, tomorrow we will have the last trading day for the VIX August options here. So VIX contracts probably will take the majority of the options volume when you're looking at it on the index level, because you will have kind of this restructuring going into the September VIX options. And that will actually be very interesting, because September, after the quarterly expiration, the third week in September, that actually usually does cause a significant amount of gyration in the market, maybe a little bit of a pullback, and then we set up for the end of the year rally going into the holidays, if it's looking at Thanksgiving and then also Christmas. So I would say we're probably at the lower end of the range for volatility over maybe the next week or so, and I would expect it to actually kind of re-rate higher here, and hopefully it actually does, so we can get more price action, more definitive price action when it comes to the indexes like the S&P 500 or the NDX.
And I'm fairly certain I probably know the answer to this question, but what are you looking for this week in terms of a market mover or potential catalyst?
Yeah, everybody's going to be focusing on Jackson Hole. If you want to take that out of it, we do have some housing data coming out tomorrow with housing starts as well as building permits. That might actually be very interesting to see, get more insights into the housing market just in general. It has been lackluster. We have seen a little bit of deceleration and an increase in inventory levels, especially in hot markets. And let's see if that's going to be translated in some of that economic data. So outside of Jackson Hole, which everybody's going to talk about ad nauseum, I would say the housing data is probably going to be the most important thing for the market this week. It may not be a huge mover when it comes to the equities themselves, but it could also give the Fed enough confidence that maybe the housing market's weakening, shelter prices, and that shelter component in CPI actually breaks a little bit, which should actually be a deflator for inflation just in general. Or do we see kind of this resurgence within the housing prices because of tariffs or what have you? We'll get that data this week, and I think that'll be really critical for the Fed.
Yeah, and we'll have that housing data sort of alongside of Home Depot's earnings tomorrow. We've got Lowe's on Wednesday, so we'll get some sort of insight into the consumer on that end as well. But Kevin, thank you for breaking down those levels for us, and we'll see you in the closers panel. We'll be breaking down Palo Alto's earnings in just a bit.